Hello everyone, Chad Frantzen here, and welcome to the Kingdom Finance Show. Today we are going to reveal what you really need to know about the economy, the stock market, and real estate. And we're going to give you action steps to take right now to become a Kingdom Impact investor. It's time to bring clarity out of chaos. Let's get started. Well, welcome to the Kingdom Finance Show. I'm your host, Chad Frantzen. Thanks so much for joining me today. On today's episode, I want to dive into the U.S. economy a little bit and update you on the jobs market, just as we've been watching kind of what's happening in the economy and with inflation. And want to spend a little time today giving you an update on some recent news that came out there. But first off, I want to really thank you for joining me on the Kingdom Finance Show. Again, our goal here is to help you take a biblical worldview for how you manage your finances, whether that's personally, whether that is professionally, for those of you who are business owners, in your retirement accounts, maybe you're helping to run an organization or volunteering on a board or a part of a church or any type of organization where you're having to make financial decisions. We want to be good stewards of that. We want to use what I call a kingdom Christian worldview for making decisions on how to steward, how to invest, how to give. And so that's what we're about here at the Kingdom Finance Show. Thank you for being a part of it. Please like and subscribe to the show. You can also follow me, Chad Frantzen, on social media, and we really appreciate your feedback and subscribing. So please give it a like. And let your friends and colleagues, family members know about the show. We really appreciate it. So on today's show, I'm going to jump into the recent March jobs market report that came out first part of April 2024. And many people may not keep track of this, so I just wanted to distill it and spend a few minutes here on today's show. This I think will be helpful as we're looking at kind of the direction things are going with the economy, with interest rates, heading into the fall presidential election. So recent information came out for March in the United States that the economy added 303,000 jobs in the month of March. And that was above the expectation of 212,000 jobs. So almost $100,000 more jobs created than what was anticipated. Now you might say, Chad, what does that mean? How do I interpret that for that? I'm going to tell you. In addition, the unemployment rate in the U.S. fell to 3.8%. It was expected to be at 3.9%, so it fell a little more. Fell more, so that the percentage was less than what was expected. So what that means is the U.S. economy has added jobs for 39 consecutive months. So for over 3 years, every month, we've had more jobs being created in the economy. So the question I propose is, how can the Fed cut interest rates right now with the job market growing as it is and simultaneously with inflation being more stubborn than the government officials, bank officials would like you to believe? And so that's really my main thesis for today's show is the jobs market for March of 2024 in the United States really points to a strong job market. Now, I'm going to give you some insight into the components of that. It's not all as rosy as you might think, but when you're adding jobs, it's going to be hard to cut interest rates. And the participation rate, even for those in the labor force, went up in the month of March. Now, one of the things that it makes us realize, and I'm just looking here at some of the notes that I've been researching, is for the jobs market, it's a bull market. There were a lot of these jobs being created were part-time jobs self-employment jobs, and multiple job holders. So outside of those three areas, part-time, self-employment, and multiple job holders, employment actually contracted, right? So inside the numbers, what that's telling us is a lot of people are finding that goods and services cost more, such as going to the restaurant, grocery store, just overall day-to-day consumer staple items. I don't think I need to debate that with you. I think you can look at your household spending at grocery stores and restaurants and things of that and recognize that, holy smokes, it's gone up a lot more than what the government is telling us. So what is happening inside the jobs market, and I'll kind of connect the dots here at the end of the show as far as, well, as a financial investor, as a steward of resources, either personally or professionally, what decisions do I need to be making right now? What it tells me is that inflation not going away. It's higher, more stubborn than the top line government number would indicate. A lot of people, a lot of middle-class people are getting multiple jobs, doing side hustle jobs, starting a small business idea, self-employment, and that's what is adding to this higher number. So it's costing more to live, certainly with home prices having gone up, rent prices having gone up, even your housing as a percent of your income on your kind of a monthly budget is higher. You factor that in, people are having to be more creative in the job market, whether it's part-time, whether it's trying to start a new business, kind of do something self-employment, or even take on a second job on that. That's actually where a lot of these numbers lie. And so it's not, a typical number that we've seen in the past, but the jobs market still expanding is going to force the hand of the Federal Reserve into what they do with interest rates. Now, I talked about this on a previous episode about how the markets at the end of 2023 were anticipating potentially 6 interest rate cuts in 2024. And so if you were talking to your banker or your mortgage person or your realtor, everyone was talking about, hey, by the time we get to the spring, rates are going to be lower. And we're recording this here the first part of April 2024, and that has not been the case. So wishful thinking, but when you have inflation that is stubborn and you have a expanding, still hot jobs market, it's going to be very challenging for the Fed to start an aggressive interest rate decrease. So now the currency and bond markets, which is really what we want to look at it, not so much what the Fed chairman says or any of the Fed governors, but looking at the currency and bond markets, what they're telling us is, and now the stock market as well, is that we're more apt to get 2 to possibly 3 interest rate cuts in 2024. Wouldn't surprise me to see one in September of 2024 as a precursor to the November presidential election. But that being said, rates are not going down as quickly as everyone had thought. Interestingly, this past week, one of the Federal Reserve bank presidents out of, I think it was Minnesota, said that interest rate cuts may not even be needed this year if progress on inflation stalls and the economy remains robust. So that was one of the Fed governors out of Minneapolis. Again, interest rates may not need to go down if inflation stalls, stays stubborn, and if the economy remains robust, right? The jobs market is what we're talking about. Now, at the same time, this past week, the Cleveland Fed Bank governor, suggested that the central bank in the U.S. could be getting close to feeling confident enough to lower interest rates in the next few months. Well, that's just great. We're talking on both ends of the spectrum here. So the voting bankers, obviously, it is a kind of a split decision here on starting to lower rates versus potentially even waiting until 2025. Now, I do think my business partner, Billy Epperhart, and I have talked about this internally. I do think we will see, 2 rate cuts. It's not going to happen fast. Obviously, there's still a lot going on in the economy that's going to prevent that from happening. But the stock market is continuing to go up. It's going up as if the Fed is about to cut interest rates. The stock market's really anticipating that. Bonds are falling as if an interest rate increase is coming. So stock market and bond market are not operating with the same mindset. Gold prices, if you look at gold prices right now, all-time highs, they're rising as if we are entering a recession. And then if we look at oil prices, again, we're talking about some of the key indicators of the economy: stock market, bond market, gold, price of oil. Oil prices are rising as if the economy is perfectly fine. Oil was back up over $85 a barrel on that. And then, of course, crypto, you look at Bitcoin, and since it's been securitized in the ETF world of Wall Street, is at all-time highs, really as if nothing's going on. There's no imminent reset or financial gravity in the economy that is impending. Interestingly, gold and crypto have really started to act in a more correlated fashion. That's a big fancy term, but it's not necessarily a good thing, but that they are tending to trend the same way when they go up, go down, or when they are in more of a sideways price range, as we call it. So a lot of big questions remain based on the job report that came out for March. There are other cracks in the concrete, if you will. We know the commercial real estate office market has some pending trouble. We know a lot of the regional banks have debt on a lot of these office buildings, and that they're going to be coming up with balloons that are going to need to be refinanced, renegotiated in the next couple of years. And so I do think we're going to see one of the big harbingers for a more volatile market, more of an economic reset, is going to be what's happening in commercial real estate, in the office part, along with the impact it will have on banks, especially some of the regional banks. I think we'll see some more banks getting nervous about their balance sheets, and that we'll have some more banks go bankrupt. Speaking of bankruptcies, we continue to see more businesses filing for bankruptcy. So even though you see a lot of companies doing well in the stock market that are tech-related and AI-related, there's a lot of bankruptcy filings. They are increasing from that standpoint. So what do we do with all that? I think, as an investor, what we do at Wealth Builders Investments is really sit down with people, companies, and help them design a personalized financial plan. And you really need a strategy that is not only strategic, which when I say strategic, I mean long-term, but you need one that is tactical. And so a tactical strategy is one that you're going to be a little more nimble. You might do different things with part of your portfolio as far as the different asset classes based on some of the trends, some of the technical indicators in the economy. Gone are the days, in my opinion, purely Chad's opinion, gone are the days where you just buy and hold, put your money 60% in stocks, 40% in bonds, and let Wall Street manage it for you. My personal opinion is I think there's a better way to do that, where you are strategic, you're looking long-term, based on goals for your family, retirement, college, your business. your ministry, but you're also thinking and acting tactically to where if there is an opportunity based on some of this economic information, there's certain asset classes that at Wealth Builders Investments that we're more focused on in 2024, not as a long-term investment, but just as a tactical decision on how to protect our capital and how to also take advantage of some of the asset prices that are out there. The reality is that the sooner interest rates go down, that will change things in the stock, bond, and real estate market. So really want to encourage you in that. Again, not giving you personal investment advice. I would advocate you visit with your personal advisor and team on that. If you, and I do want to make this offer, if you are not working with a financial professional team that has a kingdom Christian worldview, and you'd like to learn more about what that looks like, I want to give you a way to connect with our team at Wealth Builders Investments. Again, we are really committed to working with individuals, families, businesses, and ministries that want to take a kingdom approach, a worldview that doesn't violate their values and ethics, to managing resources, to creating a plan of generosity for giving and growing wealth to impact the kingdom. So if you'll visit wealthbuilders.net/invest, I've opened up some meetings with some of my team, and we'll be happy to jump on a call with you, kind of talk through just on a complimentary nature where you are personally with your business or ministry, and what are some suggestions that we can give you for that. So again, I can't give you personal advice on the podcast. This is really educational in nature, but want to give you a way to connect with us. Billy Epperhart, my business partner, and I really want to do that. And so if you go to wealthbuilders.net/invest, sign up for a complimentary phone call. There's no cost. There's no obligation. We've got a team of licensed advisors, and we can really customize input and answer your questions on, okay, how do we navigate our financial resources based on what's going on in the job market, interest rates, with stocks and crypto being at all-time highs, with the presidential election coming down. We do expect more volatility as we head into the fall around that. So want to suggest that to you as a major takeaway. So, well, I hope this has been helpful. I know it was a little technical, but I wanted to cover that on this show just as a follow-up from the previous podcast where I talked about interest rates on this. This was a pretty informative jobs announcement for March, and I think it does continue to reinforce our thesis that rates are not going down as quickly as we thought, and inflation is here for the formidable future. It's interesting. I was reading a Wall Street Journal analysis. I always joke with my family that I'm amazed at how much our grocery store bill is in relation to how many bags of food get brought home. But I finally found some analysis has been done on it by Wall Street Journal that showed that a purchased basket of supermarket grocery store goods has increased by 36.5% over the past 4 years. So about 8% a year, right? So that is much higher than what the normal inflation is that the U.S. government CPI shows. So really, 4 years ago, let's just say right before COVID, that $100 of groceries, what it cost 4 years ago, now today cost $136. And so if you've got a family of four, that is pretty meaningful. And so that really goes into what's happening in the job market. It goes into interest rate policy. And so I want to encourage you, just as you pray about, talk with your family and your team on, okay, how are we managing resources in this type of inflationary environment? There's some key strategies, and I'll be happy to share those with you in a one-on-one setting, but there's certain things you want to do and certain things you do not. Again, you want to have a very diversified plan. There are many opportunities, but I want to encourage you, don't just have everything in a bubbling up stock or crypto market. I know we're all making money in that, but there is this concept called financial gravity, and there will be some type of black swan event, whether that's related to the election or to global wars or to the regional banks and office real estate, that things can turn quickly, as we all know. Not to strike fear, but just want to encourage you to really have a well thought out strategic and tactical plan to how you manage resources. Well, that's all I have for today. I hope it was informative. Again, connect with our team at wealthbuilders.net/invest. Get your free complimentary financial consultation, and we can kind of go into some of this in more detail in a custom nature, and I want to provide that to you. So reach out to us there. Please subscribe and like the show, Kingdom Finance Show. We appreciate you being here. Pass it along to friends and family. Again, we want to help you bring clarity out of chaos using a kingdom mindset for managing your resources and being generous. Well, take care. This is Chad Frantzen, and I appreciate you being here, and I will see you next time on the Kingdom Finance Show. Thank you so much for joining me today on the Kingdom Finance Show. If you enjoyed this podcast, please subscribe and leave us a review. It really helps to get the word out. For more resources on becoming a kingdom investor and to connect with us directly, visit our website at wealthbuilders.net. That's wealthbuilders.net. We'll see you next time on the Kingdom Finance Show. The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Authentic Counsel, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine risk factors and other information contained in the memorandum.